You started trading because you wanted financial freedom, to make lots of money, and to fire your boss. You learned everything you can get your hands on. You watch hundreds of trading videos on YouTube, you read trading books, and you study an online course. And 1 year has passed, and you are still not profitable. In this video, I want to give you the exact steps that I took to become a consistently profitable trader so that you can become a profitable trader in less than 1 year. I can't believe that I'm giving so much valuable information for free. Do not skip through the video, watch till the end of this video and make sure you hit on that subscribe button. The first step is to build your foundation. To succeed in trading, you first have to be obsessed with learning how to trade. I was so obsessed to the point where I just started trading while working a 9-to-5 job for 6 months straight. So during this entire 6 months, every single day without fail, I'll be so locked in to starting trading that my phone is literally on airplane mode most of the time. And during the weekends, instead of going out with friends and partying and clubbing, I stayed at home to study trading. That is how obsessed you must become if you actually want to succeed. And today, I'm very grateful that I sacrificed those 6 months of my life, because those 6 months of hard work has changed my life forever. The first thing you must do before you do anything is that you want to learn all the basics, right? You want to learn everything you can on trading. There are basically 4 factors that you must master. Number 1, your technical analysis, which is basically how to analyze the charts. Number 2, fundamental analysis, which is basically how all the economic news and announcements affect the currency. And number 3, your risk management. This is one of the most important factor ever. Risk management will determine if you are a winner or a loser when it comes to trading. And last but not least, your trading psychology. You basically need to have like the proper mindset to succeed in trading. So these are the 4 things that you must master if you want to become a successful trader. And you can master technical analysis in, I would say, less than 6 months, also fundamental analysis. But the hardest part is risk management and your trading psychology. It takes a lot of discipline to actually master your risk management and your trading psychology. So I will highly recommend you to go watch all my free trading courses on my YouTube channel and watch them in order. I literally done like a full course on candlestick patterns, support and resistance, supply and demand, all of these basic foundation of trading. I have done like a course on each one of them, so go and watch every one of them. And after you have finished watching the free trading courses on my YouTube channel, go and watch my unfiltered trading episodes. There's like literally like a playlist of episodes where I teach you how I trade and everything I know about trading. So that will definitely help you guys out. And as a trader, you must always be learning more every single day. There is always something new or something more to learn when it comes to trading. Even if you think that you already know everything, there's always something new. Things like world politics, news events, economic trends, even the weather have an impact on the markets. So the more you understand the past and current markets, the better prepared you are to face the future. As you learn more about trading when you are studying, make sure you take down notes on a notebook or your laptop or phone, whatever, because I found that taking down notes has helped me process this valuable information much better and also help me remember strategies much better. So the second step is what I call the focus stage. So there are basically 3 types of trading styles out there: your swing trading, your intraday trading, and your scalping. I want you to focus on one trading style and learn everything you can on that style. So how do you choose your trading style? The best way to find out your trading style is to read this book called Market Wizards by Jack Schwager. You'll be exposed to the different trading styles by successful traders, and you will learn the essentials of what it takes to become a consistently profitable trader. Once you find a trading style that resonates with you, go all out and learn everything you can about it. For example, let's say you choose scalping. I want you to go read books on scalping, watch YouTube videos on scalping strategies and tips and secrets, and use Google to research everything you can about scalping. Go on to my YouTube channel to find more videos on scalping like these examples right here. So after you have choose your trading style, you have to choose your trading strategy, right? There are a shit ton of trading strategies out there, a lot of indicators, a lot of smart money concepts, and also price action, right? So there's basically like thousands of strategies out there. And I personally use price action trading, which is basically just focusing on the naked price movements without using any indicators. So just blank charts, raw charts, focus on what the candlesticks are doing, and that is how I trade. So I'm not telling you to use price action. What works for me might not work for you. What I want you to do is to go experiment with different trading strategies and also go backtest them and find out which one works best for you, and then use that particular strategy. I tried using different indicators like MACD and Bollinger Bands, etc. But I found out that my favorite indicator, or rather the one that works best for me, is the exponential moving average. So if you watch my videos, you will know that in almost all of my videos, I'm using the 8 and 14 exponential moving average. When you are choosing a trading strategy, I want you to take into account these few points. A good trading strategy will allow you to know when to enter for the trade, when to enter for a buy, when to enter for a sell, and when to exit, which is basically where to place your stop loss and where to place your take profit, and also when not to trade. Okay, there are some conditions when the market is going crazy and you should not be trading. And also, last but not least, your risk to reward ratio. You must take into account what's the minimum risk to reward ratio before you enter for the trade. The third step is to plan. You all know the saying, if you fail to plan, you plan to fail. And that is exactly 100% facts in trading. When you are trading, you will experience lots of emotions like fear, greed, or FOMO. All of these emotions will cause you to make bad decisions when it comes to trading, when you are trading. And these emotions, these bad decisions will cause you to lose money. So if you let these emotions control you, you will lose money. So how you can prevent this is by creating a trading plan. So these are the 7 things that must be included into your trading plan. Number 1, what is the time frame that you will be using? You must define the time frames that you are trading on, because if you are a swing trader, you will probably be trading like the 4-hour time frame or the daily time frame, while the scalpers are trading on a 5-minute time frame. So you must determine what time frames that you'll be using. Number 2, what markets will you be trading? Are you gonna trade stocks or Forex or crypto? Number 3, how much money are you willing to risk on each trade? This is a very important one. It all comes down to risk management. You must know that how much money you are okay with losing on each trade. I would recommend you to risk 1% on each trade, or rather less than 1%, especially if you are a beginner. For example, if you have a $10,000 account, you cannot lose more than $100 on each trade. Number 4, what are the conditions of your trading setup? What will make you enter for the trade? Example is that you can see some sort of moving average crossover or some sort of candlestick pattern that will allow you to enter for the trade. Write down like the requirements of your trading setup. Example like, what do you want to see on the charts that will make you enter for the trade? When the market is trending, then that is when you want to trade. Or when the market is ranging, going sideways, you do not want to trade. Put down the requirements of what you will look out for before you enter for the trade. And number 5, how will you enter for your trade? Will you be entering when price is retracing, retesting, pulling back? Or are you going to enter on the breakout immediately? And will it be like a limit order or stop order? Or are you going to manually enter for a buy or sell? Put that down too. And number 6, you need to put down where is your stop loss. Not a single professional trader will enter a trade without a stop loss. So the first question, where will I get out if I'm wrong about that trade? And the 7th thing that you need to put inside your trading plan is, where is your profit target? What if this trade go as planned and price move in your favor? You need to know when you're going to close that trade and take profits. So those are the 7 things that you must include inside your trading plan. And the truth is, creating a trading plan is the easy part. The hard part is to actually follow the trading plan, not today, not tomorrow, but consistently over the next few months or over the next few years. That is the hard part. Once you have completed your trading plan, it is time for you to execute it. You must execute your trades consistently according to your trading plan. That means that you can only take that trade if it lines up with your trading plan. If it does not line up with your trading plan, do not take that trade. If your trading plan tells you not to trade when the market is consolidating, and then when you pull out on your charts and you see that the price is actually consolidating, going sideways just like this, then guess what? Do not take that trade. Stay out of the market. Remember, there is always another time to trade. There will always be trading opportunities. Be patient. If you are just entering trades based on how you feel instead of following your trading plan, it'll be impossible for you to tell whether your trading strategy works or not. Another point is that you cannot change your trading plan just because you lost a few trades in a row, because results are random in the short run. So this means that you need a minimum of 100 trades before you decide whether your trading plan works or not. Remember, you cannot control the market. You cannot control how much money you'll be making tomorrow or next week. But there is this one thing where you can control, and that is yourself. You can control whether you stick to your trading plan or not. You can control how you react to what price is showing you, react to what the market is showing you. So stop trying to control the market and start by controlling yourself and your emotions. The fourth step is to record. After you have started trading, you need to create a trading journal so that you can record down and track your trades. Your trading journal is like a diary that records your trades, and this determines whether you become a consistently profitable trader or a loser. A trading journal helps you identify your strengths and weakness. No one is a perfect trader. It does not exist. I used to search for the perfect trading strategy that works every single time. So whenever I lose a trade, I will go onto YouTube and search for the next 100% win rate trading strategy. And that has cost me a lot of money. Because I didn't know what worked, my trading was quite inconsistent. I will win some money and then lose some money, and then win some money again and then lose some money. So that was my weakness, hopping from one trading strategy to the next trading strategy. But how did I realize my mistake? Because I recorded my trades in my trading journal, and I realized that my trade setups, they are always different. 1 minute I'll be trading breakouts, and then another minute I'll be trading pullbacks. And that's the problem. I couldn't pinpoint what worked and what didn't because my strategies were always changing. This is exactly why having a trading journal is so important. It will allow you to learn from your mistakes, and that itself will prevent you from losing more money. If you have a trading journal, you can look back at your past trades and identify which patterns are costing you to lose money and just stop trading them, and then focus on the ones that are the most profitable to you, and you will find your edge in the markets. Now it is time for you to apply what you just learned. So the first step is to scroll down right now and smash on that big fat red subscribe button, and also click on the first link below so that you can start watching my free trading courses in order. Okay, make sure you watch them in order. And if you want to know more about how to actually create a winning trading journal, click on this video right here to find out more. It's literally like a step-by-step guide on what to include inside your trading journal. And remember, you're just one trade away. Mwah.